Hey everyone, thanks for joining in. Hopefully it's been a great day. So we've got CPI, we've got inflation. It's very important today on what to focus on. It's not the headline CPI numbers actually that we are going to focus on. It's actually the core CPI. But just a quick sound check and then we can get started. Yeah, we'll go through, just a little bit of a recap on May and June as well as what we anticipate for today. All right, audio seems to be good on my side. Let's get started. We don't have a lot of time until we need to set up our orders and stuff like that. But this is actually news trading session number 3. We're supposed to have one on Monday, but that's going to be switched for next week. This is going to be your inflation session. My name is Zero and Jaro, and let's get this started with a quick disclaimer. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and do not constitute investment advice or a personal advice. It simply is a general advice. And just to point out, past performances does not reflect future performances, so we are going to take a look at some of the past numbers as well. All right, some bonuses for participants. We'll give you the promo code to double your deposit bonus later on at the end of the session. You should be getting an email on the access to the private Telegram channel if you registered through the website. You submit your email, and that's how you get access to the Telegram channel. But let's just jump in straight away on what inflation is, and then we'll take a look at some of the definitions on the inflation number, the CPI. Also the core inflation number, because tonight we actually want to focus on the core inflation number more so than the headline inflation number, and I'll explain a little bit about the differences between the two tonight. And then obviously we're going to have a real-time example of CPI trading. In fact, we're going to be trading live as well, so get ready. All right, so let's quickly run down on what inflation is. So inflation is the rate at which prices for goods and services rise. The most commonly used inflation indexes are the consumer price index and the core inflation, which is the core consumer price index, right? Those are the main ones that we're going to take a look at, and then we also have the secondary one, which is a PPI. I'll explain a little bit about the PPI later on. So the consumer price index is basically a critical indicator of pricing pressures in economy. It provides a gauge of inflation. So forex trading monitors the CPI as it can lead to changes in monetary policy by the central bank that will either strengthen or weaken the currency against the rivals in the markets. Now, this is in general. I'll explain a little bit about the context on what we are looking at from the FOMC and what the market is currently expecting from the FOMC and what the CPI is for tonight. All right. So let's take a comparison between the CPI and the PPI. So the CPI measures the cost of living. It basically includes broad range of goods and services purchased by consumer. Mainly with the CPI, it's more on the basic necessities that's actually being measured. So it's not really it's a need that's currently it's being measured. It's not really the wants that are currently being measured through the CPI. Also includes international personal consumption items. Scopes exclude changes in interest rates or costs. And then if we take a look at a PPI or the producer price index, so we've got consumer on one side, we've got the producer on the other side. So the consumer side is basically what are the costs of purchasing those basic necessities from the consumer side, and then the PPI number is basically how much does it cost to produce those items, right? So it measures real growth in output. It includes items produced for personal consumption, does not include imports, so exports is included. Encompasses services with prices including an interest rate component. So we've got the CPI and PPI. Just to make it simple, CPI, it's what the consumer is going to have to fork out. So if the CPI number goes up, that means inflation is going up, goods are getting more expensive. If the PPI goes up, then it costs a lot more to produce a certain items, which would lead to a higher cost prices. So these two are basically the main drivers of what the CPI, the inflation of an economy is, okay? So tonight we're going to take a look at the US inflation number. Obviously, this is going to, the definition for inflation is actually going to apply to all economies. The CPI and the PPI for every economy is likely going to be different as well. All right, let's talk a little bit more about the core inflation. Now, the core inflation refers to the change in prices of goods and services, excluding those from the food and energy sectors. These items are excluded from this measure of inflation because their prices are more volatile. So typically, core inflation is determined using the consumer price index, obviously, right? But some food items that are being excluded. There's actually a definition of this one. It's actually I believe fresh produce is excluded from the core CPI, but all the other products like canned biscuits, packaged products, packaged foods, I think those are included. So I think certain countries exclude certain items as out of the core inflation. All right. But if I'm not mistaken, the excluded items typically relates to more on the fresh produce. That's basically being excluded from the core inflation. It also exclude oil prices, oil consumption. So it basically kind of give you the underlying inflation in the market. So there are going to be 4 data that we're actually going to be taking a look at tonight. It's actually not just the CPI numbers. Depending on the news site that you're going to get, they might exclude some of the items out as, not a high impact news. But today, we're actually going to be focused on a lot more on the core CPI numbers. Okay, so let me just quickly jump in on what happened in May 10th, 2023. This is on an example on the Euro USD. I've got my note here, and you can see on the screen there, it's May 10th. The CPI that got released was 4.9. The previous number was 5%. The consensus was 5%. So the number is actually lower than what the consensus is by 0.1%, which is not a huge drop. But I'm not too concerned about that. On the 10th of May, the core CPI went down from 5.6% to 5.5%. Per consensus of 5.5%. So the headline inflation number goes down below consensus. The core inflation goes down per consensus. All right. This is on the Euro USD. You can take a look at the movement here on the Euro USD. The initial reaction is actually the one that has that dotted line there. That's basically the first 15 minutes of the news being released. And if you take a look at the movement there, it is quite a huge jump. It is about 70 pips of movement in the first 50 minutes, right? What happens after that, if you can take a look at this one here, unlike the NFP that we trade on Friday, where we have several strategies where we can actually fade it, where we can actually, kind of do the stop orders and the buy stops and the sell stop orders that we can do. We can also fade it as well, and you can also trade it, after the case. But with the CPI, it's likely going to be different. And I'll give you a little bit of a heads up, a little bit of a warning. If you take a look at the movement on the first 50 minutes, it kind of breaks the upper range. So if you have a buy stop, it's going to get triggered and then it's going to run. Now, the timing here, if you take a closer look, in the first 1 hour, it's losing a lot of momentum, and the market just kind of reverse on itself. So you need to get in, you need to get out really quickly, or make a decision on what that is going to be, right? Is it going to be an intraday trade? Are you going to be scalping the market? Are you going to have a position trade? Think very carefully about what you want to do, because this is going to have an impact on your trading performance. The way we're going to be trading tonight, we're actually going to be trading the first 50 minutes, right? And then we're going to get in, we're going to get out, and then if there's any question, any request for anything, then if we have the time, we'll go through that. But we want to focus on two currency, three gold, including that would be 4, which is the Euro USD, Pound USD, gold, and the dollar Japanese yen. Those are going to be the focus for tonight. Now, this is on the May 10th. So we have a CPI that's below consensus, which is supposed to be good, and it is good, right? It's stronger for the US dollar. But there are certain contexts to what the market is looking. Back then in May, the market kind of expects the Fed to continue hiking rates, and they are still likely going to continue hiking rates. That was the case for the month of May. So the drop to just 0.1%, it's not a drop that's so significant that the FOMC is going to stop hiking interest rate. And that's what causes the US dollar to strengthen on the 10th of May. Now, fast forward to 10th of June, 13th of June, which is last month. We did this, and this gave me a lot of headache. because my buy stop and the sell stop got triggered and I was pretty much hedged. This is the same case scenario, and if we take a look at the numbers here, we've got the CPI at 4%. The consensus was at 4.1%. It's a drop from 4.9%. A 0.9% drop is exactly the same thing that the market is expecting tonight. The market is expecting a 0.9% drop on the CPI today. Okay? Now, with the core CPI, which is not on screen, but I have it on my hand, the core CPI year on year went down from 5.5% to 5.3%. The consensus is 5.3%. This is a much bigger drop in the market. Now, if you take a look at the reaction in the market, obviously there's that whipsaw that happened. Take a look at the initial reaction to the market. The first 15 minutes, and that's pretty much it. And then the market just reverses on itself, right? It actually creates a lower low. It basically creates a higher high, and then it creates a lower low. Disrupts the whole thing. And basically the market was basically on pause for one whole day. So it took one whole day for the market to kind of figure out what is going on, right? We've got the exact same situation. So this is where the CPI is a little bit unique, all right? So if we have a number that's below consensus, and we've got the core CPI per consensus 2 months in a row, on the month of May and the month of June, we got two different reactions to the market. This one here, if we take a look, the drop in the CPI was a lot, right? It's basically nearly 1%. That drop basically causes a little bit of a change in the market sentiment. Now, market is heavily pricing in for tonight's CPI, so I don't know what is actually going to happen tonight. There's a lot of unknown. There's a much bigger probability that everything can actually go wrong tonight. So just to give you a little bit of a heads up, with trading CPI, it's a little bit unique because you need to understand the context of what the market is currently thinking. Now, the market is currently expecting that CPI number to drop down by 0.9%, from 4% to 3.1% tonight. With that thought, the market is actually expecting the FOMC to hike in July and then pause, right? I know they're likely going to hike in July. They will hike in July. I think the market is actually looking for guidance going forward if the FOMC is going to hike or are they going to stop for 2023. I've got my own views on it, but it is my own view, so just a little bit of a disclaimer here. My view is that the month of July, the FOMC will hike by 25 basis points, and they will actually hold on until closer to the end of the year, maybe October or November, and see if the inflation number goes up, and then they will pull that trigger again for another 25 basis points hike. Now, that's the second part is actually what the market is, looking at the core CPI tonight. Okay? So depending on what the market is expecting from the FOMC, if you take a look at the movement here on the US dollar itself, it reverses on itself, but on the next day, it kind of picked up, right? People start noticing that the FOMC might need to slow down a little bit, and that's where the US dollar starts to weaken. So the strength of the US dollar itself, when we take a look at the CPI numbers, actually tied into what the FOMC or what the market is expecting the FOMC or the Fed to do in terms of interest rate hike. So that's what we need to look at for tonight. Okay, so let me bring out the data because there are actually 4 data to look at. We've got core inflation rate, right? This is going to be the focus for tonight. This is the core CPI numbers expected to drop from 5.3% to 5%. Okay, so obviously we have seen that go down a little bit. Now, the difference between core CPI and the headline CPI, and this is probably what everyone is going to be looking at, which is the headline inflation number or the headline CPI, which is the CPI year on year, expecting a drop from 4% to 3.1%. This is what most traders that don't understand fundamental is going to be looking at, and they might make a wrong decision just basing on that specific number. We are going to be doing this a little bit different. This is why we're doing this webinar, so I can give you that information that the core inflation number is actually much, much more important tonight. The headline CPI If it drops down, it's fine. It's not a big deal, right? It drops and goes up much more significantly than the core CPI. Now, if we take a look at the movement on the core CPI number, if what we're looking at is if we don't see it at 5.3% to 5%, let's say we get 5.2% or 5.1%, that's going to be a strong sign that the FOMC will still need to do a lot more hiking in this year. All right. So the inflation rate, there are several scenarios. Number one, if the headline inflation doesn't go down as much as what the market is expecting, the US dollar will get stronger. Okay? The thing is, I don't know if it's actually going to get stronger today, or is it going to take one day for the market to realize what's going on and then the US dollar gets stronger? I don't know. But there are several scenarios. Scenario number one is that we get everything per consensus. We got inflation dropping down from 4% to 3.1%. We got core dropping down from 5.3% to 5%. That's going to be as per consensus. Now, this is where it gets a little bit funny. Market is already pricing in this consensus. All right. So the market is currently expecting the numbers to be exactly as that. What if that number comes in per consensus? This is where we might actually see a little bit of a reversal going on in the market as well. We still don't know what's going to happen if everything is as per consensus, which means if everything is as per consensus, then that's probably the worst case scenario for tonight. Okay? Because there's a lot of unknown. People have been selling and buying the rumors. They're going to sell the facts, right? Okay. Now, the other scenario is that if we have a drop in the headline inflation number from 4% to 3.1%, right? That's fine. But the core inflation didn't go down, or didn't go down as much as what the consensus is, which is 5.2%. So what I'm trying to say is, let's say the core inflation is 5.2% tonight, or 5.1%. Headline inflation could be per consensus, but that's where we might expect the US dollar to get stronger, because then market's going to say, look, the core inflation is not dropping down as much as it needs, right? I think the FOMC would probably need to do more, and that's basically what the market is likely going to think. The last scenario would be if we have a drop in core inflation, but the headline inflation, isn't dropping as much as well. So anything about 3.5 to 3.9%, even though the core inflation drops, that's still going to be an indication that the FOMC is still or have room to continue hiking interest rate. So those are the three scenarios for tonight. So by looking at those scenarios, there's actually one clear picture that's being drawn here. Unless everything is below consensus, all right? Unless everything is below consensus, so let's say inflation rate it's below 3.1%, coming in at 3% or maybe 2.9%, core inflation below 5%. This is the only criteria, or this is the only scenario where the US dollar is actually going to weaken. So I'm just giving out a heads up in terms of what the market is actually looking. It's actually not the headline inflation, or it's not the CPI year on year. It's actually the core inflation. That's going to be the focus for tonight. Now, the other thing that we are going to take a look at is actually the monthly numbers. This is secondary, right? This is basically the yearly numbers is basically just the index, right? Think about it as the index itself. The monthly changes as how much inflation has gained throughout the month. Okay, so the expectation, the way we read it, is not that it drops from 0.4% to 0.3%. No, 0.4% was the gain last month. 0.3% is the gain expected this month. Okay, so for the number of June, because we're in July, we're looking at last month's number. Now, if the core inflation monthly gain drops down from 0.4% to 0.2%, that means inflation is slowing down. But if the monthly core inflation rate is not slowing down, then that's where we need to be a little bit more cautious. I'm not too concerned about the monthly inflation rate, because I think a lot of traders are just going to be focusing on the headline. The core changes every month, or the monthly CPI, core CPI, that's going to be the focus. If you get a number that's lower than 0.3%, that means the inflation is slowing down. Okay. Now, what has this got to do with the FOMC and why is it so important? Because if you take a look at the headline inflation, it's at 4%. The inflation target guideline from the FOMC is 2%. The ECB is 2%. The Bank of England is 2%. Bank of Japan is also 2%. Pretty much everything is just 2% right now. What it's trying to say is, look, if we have a drop from 4% to 3.1% on the headline inflation or the CPI year on year, then it will only take 2 months for the inflation to go back down to 2%. Doesn't mean that the FOMC will need to stop hiking rates because what they want to bring in, and this is a concern that I have, is that they might actually refer to the core inflation number, which is most of the time it is actually the core inflation number that's actually being monitored by the FOMC or any central banks at all, because the core CPI represents the underlying inflation in the economy. Okay, so I think what the FOMC wants is for the core CPI to drop to 2%. So they might stop hiking rates after that, 25 basis points hike in 2023, but then they'll start moving on. So they might end the whole interest rate hike cycle, but they'll move on to monetary tightenings or quantitative tightening. So it's not kind of done in terms of fighting inflation for the FOMC, even though they stop hiking interest rates. So this is one of the concerns that I have, that the market might not price this in yet. Okay, all right. Let's take a look at the chart then. We have about 7 minutes. I don't have time to look at the questions, but I'll get to that questions once we set up our orders for tonight. But here's on the Euro USD. We are actually going to take the upper range for today, which is at about 1.03, 1.10360. So I'll actually adjust it at one. We'll actually create a buy stop a little bit higher. I want it to be at about 1.1040. Just give it a little bit more room. So I have the buy stop at 1.104. We're going to be doing the buy stop and the sell stop orders. So we're not going to be doing the limit orders at this point in time, but it is up to you. There are several scenarios there. There's a lot of people that could be waiting for a limit order somewhere around 1.1 for the Euro USD. But I'm actually going to take a much wider range. Yeah, I think about 1.1 should be about right for a sell stop. But I think I would actually want to have it a little bit lower than 1.1. I'm actually going to have it about 1.0975. No, actually no, it's a little bit too far. For a short-term trade, it's a little bit too far. 1.09. Yeah, well, about 1.0990. That's about the stop orders that we have. So I'm actually giving a little bit more room because last month we placed it too close together. I got whipsawed. So for the Euro USD, we got a buy order at 1.10, 1.1040. We've got a sell order at 1.0990 for the Euro USD. It's there on the screen if you want to take a look at it, but it's there, so we kind of cage it. It's going to get released in 5 minutes, so we need to move quick. Now, for the pound USD, you want to have it a little bit higher. For the pound USD, you really want to have it above that high there. I would actually adjust it a little bit higher, maybe about 75, 1.2975 for the buy stop. And for the sell stop, I'm actually going to use yesterday's range as a sell stop. Just want to give it a little bit more room. That's going to be placed at about 1.2880, which is about there. All right, so I'm actually creating a little bit of a range on this. I'm actually giving it a little bit more room because it's much better that, if the orders get triggered in one direction rather than both of the orders get triggered, and then we have to make a decision on what to let go and stuff like that. All right, the dollar Japanese yen, this is actually pretty simple. I'm actually going to have a sell stop just at about lower than 139, about 138.90, And in terms of a buy stop on this one, we don't actually need to look far. I think about 140. That should be enough. All right, so dollar yen is actually pretty easy. Buy stop at 140, sell stop below 139. So it is a huge range as well. All right, gold. If you are trading gold, then you actually want to have this just above today's high in terms of the buy stop. In terms of the sell stop, you got a couple of options, but I much prefer one that kind of encompasses a little bit of a range, so a little bit lower below 1930 for gold. All right. So those are the positions that we are going to be focusing on. In terms of yen crosses, if you want to trade like the selling yen and whatever, it's actually going to mimic what the dollar yen is going to do. So it's highly dependent on the dollar Japanese yen. All right. Let's get serious. All right, so you got your orders on the Euro USD. You really want to have it at 1.1040. That's the buy stop for the Euro USD 1.1040. I'm gonna repeat it again. Buy stop at 1.1040. Sell stop at 1.0990 on the Euro USD. For the pound USD, you've got a buy stop at 1.2975. And then you have a sell stop at 1.2880. For the dollar Japanese yen, you have a sell stop at 138.90. So just 10 pips below 139, sorry. And then you have a buy stop at 140. A very simple number, very easy. Buy stop at 140. Sell stop just slightly below 139. Gold, you've got a buy stop about 1941. You've got a sell stop at about 1929. And that's pretty much it. Now we just need to wait. But while I'm waiting, I'll go through some of the questions that we have there. So thoughts on the CPI? On the dollar index. All right. I'm probably going to be focusing a lot more on the yield, but for the dollar index, if you take a look at the dollar index, I think we're still fighting about 101.50 on the dollar index itself. So this one here, it's going to be a little bit tough, but I think in terms of how far down it could go, I think the dollar index is probably limited to about 101 for now. Doesn't matter what the CPI number is going to be. All right. Okay. This is going to be straddling the market. We're not going to be fading the market. Yeah, what if the data is mixed? As I said, I gave a few scenarios in terms of what the mixed data is. If the data is mixed, then the focus would be on the core CPI. What we want to look at is, how strong the drop is on the core CPI numbers. Yeah, CPI generally comes with mixed data, and from what I just explained, we've been getting mixed data as well. But what I'm trying to say was the mixed data that we got in May and June mimics one another. The core CPI, both of them are per consensus. The headline CPI was actually below consensus, but we actually have two different reactions in the market. All right, ready? So numbers should be out by now. All right, what do we have? We got 0.2%, which is lower than what the market is expecting for the monthly change, which is great. Just waiting for the headline inflation numbers to come in. What's it gonna be? Do we have anything? All right, core inflation rate year on year is actually 4.8%, lower than what the market is expecting. So this is a good sign that the FOMC might actually stop for a little bit. The headline inflation is at 3%, which is actually below the consensus as well, which is 3.1%. So we should have some orders triggered by now. I think gold got triggered, everything else, no, I think it should be about 2 got triggered. And it decided to crash on me. All right, let me work it out. So I think this is the same situation that we had last month as well. All right, just give me 1 second. All right, so we got buy euro USD, sell dollar yen triggered. I need to close my sell euro USD. I need to close my buy dollar Japanese yen. Gold sell needs to be closed because we already got a long gold number. And okay, everything is good. I think the only one that hasn't been triggered is actually the pound USD. But that's pretty much it. Not really seeing a lot of reaction right now in terms of entry prices. Not too bad, I guess. I got in at 1.0430, about 3 pips spread on that one. Dollar yen 138.90. So yeah, everything is good. 194203, everything is good. All right, we got 3 being triggered right now. Just giving you a heads up. I don't know how the market is actually going to react. I don't know for how long this is actually going to move. So yeah, be quick. If you are profitable, you might want to get in and you might want to get out. Okay, and I think it just crashed on me again. Oh my god. It's probably my installation. I hope you guys are doing okay on the platform. All right, so I think the buy is actually going to get triggered for the pound USD anytime soon. I'm just waiting for it. But yeah, initial reaction, it's not that extreme. We're looking at about 40 pips on the Euro USD. Pound USD, pretty good. We are looking at about 70 pips on the pound USD. Not too bad. The dollar Japanese yen, huge drop on the dollar Japanese yen. Just be mindful on the dollar Japanese yen just in case it snaps back up. For gold, I think we're good to go for gold. If you have a target for gold, I would go for about 1950. You know, that's probably where you want to go out from gold if you have that trade. For the Euro USD, you want to go 1.11, probably the most. I'm actually going to be pretty happy about 1.1075. Pound USD, you want to go 1.3. You really want to go 1.3 just in case. But my buy stop hasn't been triggered yet, so I need to put it back down there. I thought it was triggered. Is it going to be one way? Because both of them are actually below market consensus expectations. No mixed number. I think the core numbers are actually pretty good. So we got 0.2%, which is good on the core inflation changes, which is great. That's below consensus. So we saw a little bit of a just 0.2% gain. Core inflation is a huge drop. This is a 0.5% drop. And then the inflation rate, which is at 3% from 4%, which is great, should be one way because this would be the scenario where the US dollar would get weaker. Now, the only concern that I have is how the market has been, attempting to anticipate a lower CPI numbers. I don't know what they're pricing in. Are they pricing in something below the consensus, or are they pricing it at consensus? That's the concern that we have right now. And as I said, whatever the number is tonight, even though it might sounds good for the US dollar, the initial reaction to market might be that, but we might get a little bit of a whipsaw going on in the market as well. So as you can see right now, it's actually not doing that well. So you're looking at market losing a little bit of a strength here. Now, obviously we need to wait, because this is only the first 5 minutes. We need to make a decision on, within the first 15 minutes on what to do with the positions that we have, that we straddled here. But we need to make that decision very, very quickly once the next 10 minutes comes in. Okay. The other yen crosses are probably just mimicking the dollar Japanese yen. Probably not to the extreme of the dollar Japanese yen itself, because I think the sterling yen had a little bit of a drop earlier. So we are looking at a little bit of a bounce going on. The dollar Japanese yen, I would be a little bit more careful with the dollar Japanese yen. Just a little bit of a disclaimer. I actually have a long-term position on the dollar Japanese yen. I actually have a long dollar yen position. I'm doing a carry trade, so I'm not here for the short term for the Dow Japanese yen. But just a little bit of a warning here. If it bounced back up above 139, it might be a great indication to watch out for that the Dow Japanese yen are actually able to find buyers in the market. Because a lot of people are actually waiting for the Dow Japanese yen. We're basically getting about 6 yen discount on the Dow Japanese yen right now at this point in time. All right. Gold should be pretty much one way until about 1950. It might overshoot above 1950, but I'm not going to go any higher than 1950 at this point in time. The Dow Japanese yen is actually not doing that great either. If you take a look at this one here, the drop here is only about 10 pips. The Euro USD is pretty disappointing as well. It's only 21 pips. It's not that much of a deal. But it is what it is. We'll wait for the first 50 minutes to be done, see what the market's going to do. I think the Euro USD is basically just approaching take profit level, so it might sort itself out very, very soon. Not much to take, in all honesty. There's not much to take. If you want to go longer term position, then you actually want to go for about a little bit higher, about 1.11. But, you know, I'm not seeing the market too happy about the drop in inflation, so I might think that the market could actually be overpricing the CPI number, or you know, they've basically priced in that the CPI is actually going to be below consensus. This is the concern that I have for CPI numbers. All right. So yeah, let's leave it there. Any requests for anything to look at? Well, we are waiting for the first 50 minutes to go through. We got our trades running on the Euro USD and stuff like that. But yeah, just a little bit of a disclaimer. I actually do have a long position on the Dow Japanese yen, the sterling yen, the Aussie yen, the Swiss yen, and the Canadian yen. I've got long positions on these yen crosses, and I'm not doing it for the short term. I'm doing it more for the long run. So the Fed still hikes this month, even with the CPI number? Yeah. That would be what we're pricing in right now, that the Fed is still going to hike this month, regardless of the CPI number. And this is something that I've been warning people about. That and I think I mentioned this in the Outlook this week, that regardless of that CPI number, if it's going to be good, if it's going to be bad, the FOMC will still hike in July. Okay. All right, so I'm not really looking at crazy strong reaction in the market. The Aussie USD is doing all right. I think the Aussie USD has a lot more room. Now let's take a look at this one. So we got the information. The other way that we can look at the market is now, obviously, through normal analysis. Now, if we take a look at the momentum that we have here, this is likely going to be limited. The resistance reads at 0.6750, so I think this is kind of the extreme point on the market at this point in time for the Aussie USD. If you want to jump in on the Aussie USD, do so. If the market pulls back down closer to about 67.20, that's okay. In terms of potential target for this one, I think you're likely going to be capped at yesterday's resistance 3 at 67.78, about 67.80 for the Aussie USD. The Euro USD, this is still running. I think in terms of Euro USD, I think we will take a look at 1.11. But again, in terms of is it safe, is it clear? Take a look at resistance 3, which is at 1.1080. That's basically likely going to create a little bit of a cap on the Euro USD on the initial run. For the Pound USD, this one here is pretty easy. I think the market is waiting for a move towards 1.3 for the Pound USD. So if you have a long position on Pound USD, then aim for 1.3. But just not seeing that strong of a reaction. I'll be honest with you. If we measure it, the first 15 minutes that we have is about 70 pips, which is kind of normal for the CPI numbers. But yeah, I'm expecting a much faster movement than what we have right now. All right, next up, it's the Dow Japanese yen. The dollar Japanese yen, obviously, this is severely oversold at this point in time. Now, obviously, this is still trending, but if we measure the drop from 145 to where it is right now, it is a significant drop, right? And where we are right now, from where it was on the 30th of June, we've seen a 630 pips drop, or about 6.3 yen drop on the dollar Japanese yen. So this one here is a little bit extreme, I must say, but it is what it is. I think this one here is still going about with how the 10-year yield and the dollar index is conducted, I guess. But this is the dollar index. Now, if we take a look at this one here, obviously this is a strong drop to the downside. Spot should be lining up at about 101 to about 182 for the dollar index. 10-year yield, this is where you want to focus on the 10-year yield, because I think with the US dollar itself, this is currently packed with a drop in the yields itself. So we've seen a move lower below 4% for the yield on the 10-year yield, and I think there's a little bit more room to go to the downside. I'm just not sure how strong is a drop for the 10-year yield. All right, first 15 minutes is going to be over soon. We have 3 more minutes. And we need to kind of decide what we want to do. As I said, look, the movement in the market is actually not that great at this point in time, because if we take a look at the movement on the pound USD, the movement on the dollar Japanese yen, we're going to be lucky if we get out with a little bit of a profit here, but we need to make that decision in about 3 minutes time. I'm still going to wait, and I'm actually going to close it up or decide to stay after the initial 50 minutes, but it is what it is. All right, so buy sell on the pound USD got triggered, so I need to close that sell stop. All right. So any questions on the CPI numbers? This is why the CPI is actually a little bit harder to trade than the NFP numbers. With the NFP numbers, it's much more straightforward, because we're not dealing with a lot of probabilities per se, because we only have the unemployment numbers. Unemployment rate and the NFP numbers. It's not too hard to kind of break apart. The inflation trade is actually a little bit harder. CPI is actually much harder to trade than the NFP numbers. It's not that it's impossible to trade. You can still trade on the news releases. The problem with the CPI number is we need to read what the market sentiment is, and then it might not go, as straightforward as you look at the numbers today. So like the numbers today, we've got everything below consensus. We don't know how the market is going to react. If the number was it's way down below the consensus, if the market is not priced in that lower than consensus number, which is good, the drop in inflation, then I think right now we should be seeing the Euro USD and the Pound USD shooting up like crazy, but we're not seeing that. The initial reaction in the market is not as straightforward as that. Okay. So again, there were several scenarios. Not the worst, but the only scenario that could trigger a weaker US dollar that could push up the euro and the pound and gold would be the scenario where everything is actually below consensus. We got that, but I'm just not seeing that happening in the market, right? This is not cool at all, because if we take a look at what we're gaining here, it's only 70 pips on the euro. We've got a negative 19 pips on the pound, negative 17 pips, 18 pips on the dollar yen. We need to close this trade right now. I'm just not seeing it, and it's the first 50 minutes done. Let's just close out. No point in staying on this trade. If any position that you have, you need to think about how it is going forward. It's crashing on me again, so let me just open up. But get out while I'm getting out here. But if you guys want to get out, just get out. If you want to stay, make sure you have your stop losses done. We haven't actually placed the stop losses on this one, but I'm actually getting out. No point staying here on this trades. But yeah, the initial 50 minutes is not that great. I'll be honest with you. What we're looking at is that we really have a little bit of an overshoot, but it's not that crazy. If you take a look at the pound USD, you're not really exceeding the range, right? If you take a look at the dollar Japanese yen, there's potential for buyers to actually start coming in at 139. Gold is actually not doing that great either. It's very close to 1950, but that's how much I would go. It's very close to 1950. It didn't go there, and it's currently dropping very quickly to about 1946. So I would say if you have a position open from the straddle, get out, because it's not worth holding on to it. If the number was so bad, like the whole inflation number is bad, and we anticipate, oh yeah, you know what, the FOMC is not going to be hiking interest rate and stuff like that, we're not seeing that reaction in the market. So either the market has actually overpriced the CPI below the consensus, and they're basically just selling the facts right now. So, you know, that's what I don't like to see when market is trying to price something into the market, because it kind of confuses the news releases itself. But that's not the whole point. That's fundamental analysis. The whole point with tonight is actually news trading. My point, or our point, is to give you an example that the CPI can be traded, with or without the understanding of the fundamentals. I explained the first half an hour in terms of what scenarios that could happen. It is actually kind of irrelevant because we're doing the straddle strategy anyway. So without that knowledge, you would still be okay. It's just that from experience, you need to get out in and out within the first 15 minutes, make it or so. Otherwise, the market could reverse on you. Okay? All right. So this is the code that you can use. It's non-farm 2023. Don't worry about the validity of it. It's actually still valid. This is going to double your deposit bonus. So if you need to double your deposit bonus, then use the code non-farm 2023. That's still applicable, and it is still very, very valid. All right, let's do a Q&A. Take profit on pound USD. I would just get out from pound USD. I'll be honest with you. So we're done with the straddle. Now let's get to business in terms of analyzing the market. If you have a long position for the pound USD, I still think the pound USD would go for that 1.3 mark on the hourly time frame. I think we're just so close to that. I don't know. Very, very close to it. I think there's a little bit more room to go for the sterling towards 1.3. But beyond 1.3, I'm not quite sure on the sterling. The sterling itself has been pushing 300 pips on this one. So it's been 3 cents ever since the start of July, right? In fact, some of us got a position about 1.27 on the sterling. And some of us are aiming for that 1.3. I'm out from sterling. I don't have any positions. Just a little bit of a disclaimer. If you have a long position on the sterling, go for that 1.3 level. I think it makes sense. But if you're jumping in right now, just to be clear, with trading the CPI releases, your stop losses is actually going to be pretty far. Your stop losses could be all the way down to about 52.5 pips. So it doesn't make your risk reward ratio that great. So be very careful if you're trading this after the case. If you straddle, get out, right? The first 15 minutes is pretty clear in terms of where the market is going to go. If the first 15 minutes doesn't give you that strength for the market to push, it's best to just get out with whatever you have, right? Negative or positive, just get out. Good enough that we have a little bit of positive for tonight. So we got out. So that's good. Can we sell pound? You can, if price goes to 1.3. Not at this point in time. I think it's a little bit too risky if you want to short pound. But if you do want to short pound, depending on the time frame, right? If let's say you're doing it on a 15-minute time frame, you want to short pound right now. I think even on a 15-minute time frame, it's still. Yeah, it's okay. It's not giving you that change in momentum yet. I think this one here could actually still go all the way up to 1.3. So I don't like shorting pound at this point in time. Despite this resistance that a lot of people are looking at, it's irrelevant because the main resistance is going to be placed at 1.3. And that's where a lot of sellers are waiting for sterling. So if sterling goes to 1.3, then yeah, if you're thinking of shorting it, then yeah, you can short it. If sterling goes to 1.3 and then comes back down and doesn't exceed 130.30, then yeah, you can go short for that one. You can go for that 1.29 correction level if you want to. But yeah, I think a lot of traders are actually going to be on that trade around 1.3 if they're looking for a short on pound USD. I'm not looking at it right now, so do not go short right now. It's going to be a huge risk for you. Better to trade CPI than NFP one side and profitable. In the first 50 minutes, yes. If you're quick, get in, get out. That's what I like to do with the CPI numbers. Sometimes we get, look, I just don't want to put the range a little bit closer. We could be a little bit more profitable if I kind of squish in the range, but I gave you the example from May and June where we actually get that whipsaw in June. So yeah, today was actually pretty good. That the market goes one way. I don't know for how long. That's something that you need to consider as well going forward. Now everything has been, published pretty much. So we've got the CPI numbers. So next one, it would be about the 26th, 27th of July, where the FOMC is going to meet and make a decision. They're still going to hike 25 basis points. I don't think there's actually going to be any changes to that hike, 25 basis points hike from the FOMC, right? All right. So, as a disclaimer, as I already said, I have a long position on the Japanese yen, I have a long position on sterling yen, Canadian yen, Swiss yen, Aussie yen. I'm pretty much all invested on the yen crosses, which is a good thing that the market didn't crash on me today, because if the dollar yen crashed on me, then it would be a little bit of a drag. But that aside, I think it's a good discount. I think it's a very good discount. It's 6.3 yen discount on the dollar Japanese yen in just a period of, I don't know how many days, 12 days. But yeah, all right. Take a look at gold. How are we doing? People in gold still trading, holding on to your position. It's going to be very limited though, because we've got 1950 as kind of a resistance on gold. In terms of Fibs extensions, I think this one here is pretty much done as well. Yeah, I would be out. I'll be honest, I would actually be out. Can we go short on the Euro USD now? Depends where momentum wise, the RSI is actually not doing great either. Look, if the number just now was bad for the US dollar, the Euro USD RSI would have shot up above 70. We're not looking at that at this point in time. Can we sell it? If you're thinking, yeah, maybe short term, yeah, I want to sell it, you could, right? Just make sure your stop loss placement is actually above the resistance 3 pivot and you're not targeting any more than the pivot level or about 1.1 max. All right. Still all right. It's still going to give you about 35 pips of risk, 50 pips of potential gain. I think it's an all right trade. Look, we're not looking at crazy range today, so I think the market is actually pretty subdued, right? So the market has moved like crazy this week. Then the data get released, they're not doing anything. But don't sit on it, because tomorrow is probably going to be where the real reaction is going to be on the CPI numbers. It takes time to process. Can we go short Euro USD? Better wait around 1.109. Don't count me on that, but I don't think we're actually going to see that move closer to 1.1. I'll be honest with you. I'm just not saying it because, as I said, if we are supposed to see that weakening US dollar, then yeah, we would have been there by now. We're not looking at it. So if you want to go short, I would say, feel free to go short on the Euro USD. Just make sure your stop losses is above 1.108. In terms of target level, do not go more than 1.1. But yeah, feel free to go crazy on the Euro USD if you want to. 50 minutes is actually not indicating anything. In fact, if there's any indication at all, the Ichimoku cloud is pretty much non-existent today in about 5 hours time. Okay? But if you want to go short Euro USD, just make sure your stop losses are way above 1.108. Don't risk too much, and your target level is at just about 1.1. Okay? As I said, get in, get out, because things could change again tomorrow. So we've got the initial reaction in the market. It's pretty much one-sided for the first 50 minutes, and then things might change. The thing is, it's a good trade on the Aussie USD. You've got your entry at 67.10. Yeah. 37.20, stop loss at 66.9, targeting 68. Your stop loss will need to be lower than 66.90. If you're thinking of going long right now, sorry, 67.10, 67.20. So you're waiting for that pullback to about 67.10. Just using the 10 because that's going to give you the best risk reward ratio. Your stop loss will need to be below the current pivot, which is going to be about 66.75, and you're going to be targeting 68 cents. I wouldn't go for 68 cents. I would go about 67.75 at best. But yeah, if you want to go for the 68 cents, I think it's all right. But just think about it. You can't go in right now because if you go in right now, risk reward ratio is actually going to be about 1-1. Yeah. So if you're waiting for that pullback to 67.10, all right. If the market bounces back up. But if the market doesn't bounce back up and it closes below 67 cents, you need to cancel that trading idea. Because any move below 67 cents would actually trigger a much deeper loss on the Aussie USD. And the RBA hasn't been too kind either today, because in terms of whether or not they're going to be hiking interest rate in the future, they basically leave it as an unknown. And they sound pretty dovish today, this morning. No, it's okay. You can wait for this one tonight. Just make sure that, the speed of the drop is controlled, right? What I'm trying to say is don't just buy in at 67.10. See if that is actually going to move any lower than 67 cents. So I actually much prefer the idea of buying once price goes to below 67 cents and then bounce back up, right? So I'll wait. Maybe about 67.10 if you want to, but I want to see price do this and then go back up to pick up your trade. Not just placing a limit order here. I would actually manually just wait for this one to happen, and then if you want to go long, feel free for the Aussie USD. Okay, it's not a bad trade. It's not a bad idea, because in terms of stop loss placement and target profit, it's a good risk reward ratio. Even if you go 68 cents, right, that's going to make it like 3.35. So I'm actually going to go a little bit lower at about 67.75. That's still going to give more than 1 to 2 risk reward ratio. So I think it's a good trade. And it's reasonable in terms of risk. It's okay. So I think this is actually not a bad trading idea. At least you're controlling the risk. For the dollar Swiss, do we see potential drop to 85? If daily closes below, okay, I'm gonna switch to daily because I was looking at the number. I'm like, what on the early time frame? No, okay. Do we get to see the drop towards 85? 85 is pretty far. I'll be honest with you. 85 is actually pretty far. This week, probably not. Right, I don't know. I think we're still going to have a little bit of support coming in about 87, which is at about support 3. So I think 85 is a little bit too far. It might take a couple of tries to get to 85, because if we go by daily and we go with extensions that we have here, I think 127.2 is about 87. Best case scenario, 161.8 is about 86. 85, it's a little bit too far at this point in time. 87, 86, reasonable for this week. Is there a potential drop towards 85? I think there is, but just we need to see if there's any strong bounce off 87. This gets a little bit hard. Now, for trend traders, this is actually pretty annoying, right? Because we are like really far away from... we are way below the previous low, and if we scroll back, the only next low that we have is basically 2015 level, which is you're gonna be looking at about 87 as a stronger support. With this here, that dip in 2015 on the dollar Swiss, that's a little bit different. That's more on the reaction from what the SNB was doing with the Euro Swiss. So this one here is a little bit of an anomaly. So be very careful. The actual support, excluding that anomaly, is actually located at about 87, which is where we are going to be looking at right now. Okay. This one here is a little bit of an anomaly, so just be mindful that the drop there was basically on the back of SNB removing the floor on the Euro Swiss at 1.2. So yeah, I know that pretty well. Okay, cool. We good for tonight? You guys good? Doing great? You managed to get in, managed to get out? Get the whole idea on trading CPI numbers? Yeah? So regardless of whether or not you understand the fundamentals, trading the news, which is something that we are supposed to talk about last Monday, but we'll have this next week on Wednesday. All right, in exchange of our live trading session, but we'll talk more about news trading next week, and I'll give you a little bit of an insight on what it is. News trading is actually not fundamental analysis. News trading is just trading the reaction of the market during news releases. There are plus and minuses on news trading, but pros and cons as well. But you see the pros here tonight is that with zero understanding of fundamental analysis, you can actually still trade the news if you know what you're doing, if you have the strategy to do it. But yeah, we basically need to simply take a look at what the market does the past few months, just collect sampling data. But I can tell you this, the CPI typically is one way, but it's not one way for a long period of time. Sometimes it reverses, and then it might go back the right way in, let's say, a day or two, or it might actually reverse the market. But again, this has a lot to do with how we read the sentiment in the market as well, and how much the market is actually priced in. Okay, cool. Everyone's doing great, yeah? So I'm assuming no one's replying to me, that you guys are doing awesome, which is great, and hopefully you guys get a lot out of this. Okay, so thanks for participating. Don't forget that we actually have one more session next Wednesday on news trading. This is where we're actually going to break down. If you have any questions regarding news trading, not fundamental analysis, it's actually news trading. I'll actually just clarify a few things next week as well. All right. I've got an open buy dollar yen at 139.04 with stop close at 138.60. Is it considered good? Yeah, by all means. As I said, I might be a little bit biased because I'm long dollar Japanese yen. In fact, I just added more position into my dollar Japanese yen at 139. So I'm pretty happy with the current going, that the US dollar, the dollar Japanese yen is actually picking up again. But I've got a few reasons that I can't actually disclose here during this session, but hopefully we can talk about it going forward in the future, maybe during the Q&A sessions, live trading sessions, or when we do fundamental analysis, then we can discuss about that. All right, thank you all. Have a great evening. Good luck with your trades if you are still trading tonight, and I'll see you next week. Thank you all. See ya.